All right, so I've got another video here. This is the weekend after earnings. So we had earnings on the 4th. 4th of February. Today is the 8th. It's a Saturday. We're going to take a look at AMD here and see what's going on with it. Everything, in my opinion, looks good as far as the company is concerned. So I don't think there is any cause for concern about coming this low. And the long and the short of it is that we should just continue to buy on Fridays because this really does need to come up. It's mostly what this look is going to be, is that this kind of has to come up. This is a 5-year 1 week chart. The 5-year is basically the extent of AMD's true history. If we go further out, let's just go 10-year. If we go 10-year, then it's just this here, where they were growing as a company, kind of establishing themselves and really becoming something worth noting. But that doesn't happen until about 5 years ago. So, we could go back to here about 2018, and that would be, what, 7 years ago. But it's easy enough just to look at the chart from this point onwards, from here onwards, and say that this is where the company becomes who they are today. So we'll be looking at the 5-year chart just to look at the entire history of AMD. For the structure of how AMD has been growing and the expectation of their growth prospects, it's this gold line here. And if we go all the way out here to today, the expectation is that they'd be worth about $150, and by the end of the year they'll be worth about $166. That would be like the fair value expectation based on the consistency of their growth. As far as the chart is concerned, where they have some lows, they have some highs, then some lows, and then some highs and some lows, and a little high and a little low, and then a big high and then a big low, averaged all out, or they collected all of the information going forward. This is the average price that is expected for AMD. So it's going to be 150 by the end of the year, 166. If we look at the entire health of AMD for the previous 5 years, it is trending upwards. There is a consistency to the trend that AMD grows into a better company over time and becomes worth more over time. 1 second. So you can rest assured that AMD as a company will become worth more over time as time progresses, and their earnings become better every year. So every quarter they release their earnings, which they did on Tuesday, and the expectation is that from year to year, AMD makes more money than the previous year. This previous earnings, they announced that they made $1.09 per share, where in the previous year they weren't at $1 yet. In the previous year before that, they weren't. What were they, about 69, 60, 58, 70 cents, and now they're 77, 62, 69, 92. So this year was better than this year, and the expectation is that this year they will make more money than this year, which was more than the previous year, and then more than the previous year, which is why they are trending upwards, because they make more money year over year. If we look at, I have their financials pulled up here. It's on the other monitor. Let me move it over here. So if we take a quick look at their financials, estimated earnings per share, that's EPS, this year is expected to grow 42%, and next year it's expected to grow 32%, and then in the next 5 years, 33%. And that's a continuous representation that the company will grow over time. So we could expect the price itself to continue to rise over time. Then if we look at the forward PE and the PE ratio, the PE ratio is price to earnings, And then the forward PE is the forward price to earnings, which would be the expectation of the price versus what they earn next year. And the price to earnings right now is 17. So now I'm going to move this to the side over here. If we talk about it from a PE ratio perspective, they should realistically be somewhere from, say, 28 to 35. That's a 28 to 35 PE ratio, where if I just say 30 or 34, because it's easier math, a 17 PE ratio and a 75% increase in price would come out to 30, and a PE ratio of 34 would be 200%, and so that would end up being 214. So the expectation for AMD to rationalize their price to earnings, how much money they make versus what they're trading at, should be somewhere between 175 and 214, with the overtime expectation to be about 150. So it's not out of the realm of possibilities to see this stock come all the way up to 150 and then want to see 175 or 214. And it could realistically come up here and stay here and build out a much stronger chart all the way up in these areas, which is where if we go to like a 1 year, 1 day chart. Oh, what was that? I don't know where these lines go from. Oh, the 3 year, 1 week. If we go to this chart, it's a much steeper incline because in the most recent years, in the most 3 years instead of 5 years, it has been seeing a massive increase in growth at about 20 or 30% per year, which is what this was. That earnings per share this year 40%, next year 30%. Earnings per share year over year, they have doubled. They've basically 100% increased their earnings per share year over year. So in the last 3 years, it has a much steeper incline to the expectation and its growth. And that's where we see this yellow line travel up to 165, 170, and by the end of the year be about 190, where that's where they're factoring in a much closer to today's reality versus 5 years ago's reality at 175 to 214. So with that being said, AMD is extraordinarily low. Extraordinarily low. So we should just continue to buy on Fridays. On the standard deviation, we are beyond one standard deviation away. It's just extremely oversold, extremely low, and extremely cheap right now. So if this is so incredibly low, then we can expect a return of about 75% to 200%, or 75% to 100% increase in price to get back into what should be expected from it. And so we'll just keep buying on Fridays and see it travel up into the 175 to 214 areas now. In the previous weeks, we were looking for, say, like 160 to 175, but it has now stayed down for 3 months. And then if we continue to buy on Fridays for the next 3 months, that'll take us out to, what is that, March, April, May. In May, we'll be moving the price target up. So in May, we'll be expecting a minimum of 170, but we don't want to sell it for 170. We're going to want to sell it for 190 or 210. So the longer this travels through time, the more AMD becomes worth more. And so we're not going to be looking for 160. We're going to be looking for 190, 200. But just on the rough math of the expectation of AMD's growth, we'll be looking for 214 or so, potentially even say 240 on the high side. Where if this goes from the very bottom to the very top, we'll be looking at about 240, and then we'll sell it up here for what would be an unfair price at that time, because at that time it'll be worth 214. Well, today it's worth 175 to 214. So if it goes up to 240, we'll sell it. We don't want to sell it for what's fair. We want to sell it for what's unfair. Same as we don't want to buy it for what's fair, which would be 160. We want to buy it for what's unfair. And right now, 107 is extremely unfair. And so we want to buy it. We want to buy it for extremely low and we want to sell it for extremely high. We don't necessarily want to look for extremely high at 240. We could look for just unreasonably high at 205, but with the price to earnings expectations on it, 205 might not be extremely unfair in the coming future. So earnings looked good. Earnings was an increase year over year and quarter over quarter. The previous quarter 77. This quarter 109. So AMD is growing. AMD is becoming a better company. It's growing year over year and quarter over quarter, and so it should continue to become worth more as a price over time. And so AMD does look good to me. Still continues to look good to me. The price and the earnings, the information that they released out on Tuesday still looks good to me, and I am still going to continue to buy AMD on Fridays. And let's look at some of the other stocks really quickly. Apple's coming down, and so we could start looking at Apple. So I'll keep that one in mind. And then Amazon is too high. Google's still too high. Facebook's still too high. Microsoft's looking all right. Nvidia still a little high. I'd like to see it around 100 before we start actually really looking at Nvidia. Plus, their earnings had come down, and so I'm curious to see what comes out of that. And this is an unfair chart to Nvidia, given that the company that they are today only really started 2 or 3 years ago, and so we would shorten this up and get rid of this 452 and some of this information to get a better look at it. If we did like a 3 or 1 week, still not quite there. It'd be like 2 years maybe. Yeah, so we could take a closer look at Nvidia to see if they are something to consider, because they're an extremely popular and well talked about company. So we can look at here's Nvidia. And so just a quick look here, their forward PE is 30, which is what I was talking about for AMD, where the expectation is that next year the earnings per share, or the progression of this year going into next year, the earnings per share, they're properly priced right now. So they're properly priced at 30, which is what I was referring to for AMD. And so if they are properly priced right now at 30, then we don't want to pay for what they're actually worth. We want to pay for, we want to buy it down here at, say, 100 or 84, something much lower. But they do obviously look like they are down, so something to consider. But I think they have to come down some more. Maybe say 105. Yeah, I mean that would drop them roughly 30%. Yeah, so we'll wait on it. We'll wait on Nvidia. We'll wait on Nvidia to come down some more. And Tesla is again still too high. Like they've been too high for a while. And as much as I would love to buy Tesla, they are too high right now. This is Tesla's PE ratio right now is 93. So they almost got to get cut by a third. And if we said they're trading at 400, you take 50% away from that, brings them down to like 200 or so. 50, 60%, we're going to want to be, we're going to want to be down in here. 180 to 220 is what we would be waiting on for Tesla before they come back to reality and come back to what they're actually worth as far as the company and what they make and what they earn. Oh, so what did we have? We had Apple. Okay, and let's look really quickly at Apple, because Apple looks all right. Oh, 36 and 27. So yeah, Apple looks okay. Um, could start buying Apple 36 and 27. Oh. Yeah, I mean Apple looks all right. Could start buying Apple on Fridays. Um, I think it is going to come down some more because this is starting to show up here, and so it'll show up as a when, and the when is coming soon for it want to taper off and fall down, and then Apple will be trading for what would be an unfair price compared to their earnings and who they are as a company. They will be trading for a lower price, so I would expect downward moves coming for Apple soon and taking it down into like the 200s where it would be considered an unfair price based on their earnings and who they are as a company. So you could start buying Apple here from like 227 down to 200 and expect a pretty decent return out of that from 200 up to 270, 280, something like that. Yeah, like yeah. And I think Amazon, no. Google. Hmm. Looks like Google paid off its when here, so it could start climbing back up again. What is that, 184 with an upside of 210? As a percent, that's really not a lot. So maybe Google's not really worth it as a percentage. Um, Probably a pretty safe buy. You could buy this from 185 all the way down to like 175. You could just buy it all through this area. Really, really nice traveling upwards to about 210. Percentage wise, it's not a lot, but Google is a pretty safe buy. It stays pretty tight, and so you could buy it out of this range here, down and in, and then backing up. So yeah, Google looks all right, and I think that was it. Was Microsoft? Oh, and Microsoft. Yeah, Google and Microsoft are about the same, where you can just buy it through these ranges, and so you could buy it here. You could definitely buy this here at 410. Um, Microsoft is pretty low right now, and then traveling upwards to 450, which on MSFU, what does that come out to? 36 up to say 46. That's a pretty good move. So Microsoft is definitely buyable. Um, which Microsoft has been the alternative company to AMD for a lot of these Fridays for the last 3 months after AMD earnings going back in November. There was quite a few opportunities to also buy Microsoft on Fridays. And so while AMD was down, Microsoft did give us some chances to make some profits out of the Friday buys if you split what you bought from AMD and what you bought with Microsoft. You take your money, you split it in half, and you say, give me half of the Microsoft and half of the AMD, then at least some of your money is making something out of it. Oh, so down, up, and then up again on Microsoft. And then what did Microsoft do for earnings? Forward 27. Current PE ratio 33. Forward is 27. So yeah, it's just a strong, healthy company. Um, Grows at a predictable rate of about 15%, 11, 14, 14, 18. But it's a growing company. It grows at a steady, strong rate and continues to go upwards. And the expectation is that the price that it is today at 410 is a multiple of 27 times its earnings. It should be, like right now it's trading at 33. We would like to see this number come up to 30 or 33, which gives it an upside of about 20%. So we'll be looking at 20% of 410 by the end of the year. That's what, $82. So we should see Microsoft over the progression of the year go up, say $82, and it'll be trading at about 500. Somewhere right about here by the end of the year. Which, if we draw this and see if the market itself has maintained that idea, and it has. It says 418. So if we followed the 3-year 1-week chart, we would expect Microsoft, based on its earnings, based on who they are as a company, and based on the consistency that's been built over the years, we would expect Microsoft to finish the year at about 520. And so if it finishes at 520, then this is extremely low, and we could see this rotate upwards and find 500 in like a month or two, and then come back down and come up and come down and come up. But over the average price that has been acceptably put in for Microsoft is 520 by the end of the year. So Microsoft looks really good, AMD looks really good, and I would just stick with those two. This is the start of the year, and so how does this year look? It looks like it's going to be the year that we should just buy a bunch of AMD and a bunch of Microsoft, with the expectation that this will, pay out very nicely over time. I have no idea what that would be on MSFU. What is this? 410, 470. Okay, so whatever from here to here is, and then let's just double it, just for like a really rough estimate. Because MSFU won't have that full-time build out. It actually might, but I know AMD doesn't go out that far. So let's just draw this out here. Yeah, so that can't be right, because this was 468, and we expect more out of it than that. Squeeze this down a little bit. Let's just say that this is, for like rough estimation, this is Microsoft 515. So I would expect MSFU 36 or MSFU 75. So we're basically double in price. Whatever you get into here, by the end of the year, will be worth twice as much. Yeah, so I think that's it. I think that'll be it for this video. Is that Microsoft looks really good. It should be the one that we focus on this year, and AMD looks really good and should be the one that we focus on this year. And that the return, as it swings out and comes back up to something that's reasonable, the return on this should be about double, which on AMDL isn't even going to be on the chart. It's not something I can even really show. But it's going to be a lot, like a lot. What is this? 25 in March of last year. Was it 227? What were we looking for? 175 to 215. So yeah, that's March of last year, 25. That's what we'll be looking for out of AMDL. We'll be looking for a return to 25. So currently at about $6, looking for a return to 25. That is a 5 to 6 times, or 500 times to 600 times return on anything you get into AMDL. So I think it's very safe to say that AMD is a buy and Microsoft is a buy. And that on Fridays, it'd be a smart idea to get into AMD and Microsoft at the same time. Split your checks in half. Buy half of Microsoft and buy half of AMD. And then when Microsoft, has been taking these up and down moves, at least you will be seeing some gains instead of just seeing AMD come down the whole time. But this really does have to end. This has to end at some point soon because it is extremely low and extremely unfairly priced versus their earnings and versus the chart itself. It is extremely low. It should be at about 160 currently. 160 and then realistically 175 to what was it 195 or something. So yeah, AMD, Microsoft, definitely should be buying those. And I think that'll be it for this video.